Hey, good morning. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting and also a venture capitalist. Standing on 6th October 2019, practically 3 a.m. in the morning, we are going to be shooting a pretty important video that is coming from the interbank desk, and I'm damn sure that the media will never report that, which is that Doge is almost on the verge of closure. Now there are three kind of desks which every bank do maintain. It's a pretty short video, not long video, 5-7 minutes video. Now one type of desk which the bank maintains is actually the flow trading desk. I don't know how many people know about flow trading and how many so-called courses the flow trading is being taught actually. And another kind of desk which bank maintain is the prop trading. And third they maintain is the interbank desk. Well, there are multiple, we're going to have a separate video on the flow trading, but there are multiple desks under the flow trading. Now, what is flow trading? Flow trading means that you take up a position in the normal asset class, which could be equities, cash, derivatives, sorry, my mistake, could be equities, cash, structured commodities, oil, petroleum and all. Basically not yours money, it's a client's money. Well, what differentiates a prop trading from a flow trading is that in prop trading you take up your own position. You invest your own money. Like in 2008 when the Volcker came into the picture, Volcker was right on one thing which people not understood pretty well, but I did. Volcker said that you take your own position using your own money. Now you take your own position using own money, so if it end up as a loss, it will never come in the P&L. Or even if it will come in the P&L that hits you, it will not hit an investor. But what happened that in 2008 bank have took a lot of derivative position on a client's money, basically created several times leverage on the client money. Well, what happened that in case of a float trading, now in case of the Doge, the float trading is a history now. They have already sold, as far as the information which is coming from the public domain, the interbank desk is that the equity flow trading they have already sold to BNP London precisely. But here I take an indemnification that I do not know whether this they have sold 100% to BNP or they have sold a considerable to BNP. But one thing which is sure that the BNP that the Doge has already sold a considerable part of the equity flow trading to the BNP. And that's quite surprising that BNP on the one side already closed their equity desk in Singapore and Hong Kong while buying the flow trading of the Doge. I do not know whether they hold any synergy in that, I don't know. But one thing I know that if there is no synergy, then this is a pretty riskier move is taking. Well, history suggests that banks have taken up positions in those instruments which in future end up led to the several $billion of the losses, and effective 2008 the examples are not short in nature. Now today another thing which came up, which is that the Doge wanted to sell their exotic derivative positions also. Well, we do not know who will end up buying that. It is the big boys like Goldman, JP, Citi, Standard Chartered, they come forward. But unfortunately, Standard Chartered name is not coming anywhere in this discussion. If you carefully see that, in the last 2 months, specifically in Singapore and India, in the Southeast Asian market, Standard Chartered is relatively, it's basically, I will treat Standard Chartered now an educationist bank. Now Standard Chartered talking too much about education, like every day on the LinkedIn they put one article about the big tech, about the insurtech and fintech and all. But they really do not. Well, I'm not getting the Standard Chartered name anywhere as far as the dealing space is concerned. While Goldman is as usual pretty active, JP is active, Citi is active, but Standard Chartered is I think either lost or they are not in a will to take up the position. But God knows about that. If Doge will sell their exotic asset, we don't know the buyer yet, but I'm sure that big boys needs to come because exotics can only be by people those who have exotics in the books. And in this regard, Goldman would always be number one. I'm sure that Goldman and Chase would surely come together and show their interest in that, but currently I do not know. Well, when it comes to the flow trading, I just would like to give you a little heads up that there are actually 5 types of flow trading. Now, this is a WhatsApp group which we have. This is only for invitation, only on invitation note. So we were discussing in the earlier in the late night. So when I was telling to my people, There are five type of float trading. One is ETP non-OTC. ETP stands for exchange trading platforms, non-OTC products. One is non-ETP OTC, non-exchange traded products OTC. One is non-ETP, non-ETP, non-exchange traded product, non-OTC product. One is ETP, ETP, exchange traded products and exchange traded products. And fifth is 1 minute. 1, 2, 3, 4, and fifth. Yeah, fifth is non-ETP and sorry, 1 minute. I think. Yeah, fifth is non-ETP and OTC. So now the question is that these five types of basically the flow trading which we have, I don't know which one Doshi is selling, but more or less there are three intentful questions which I want to discuss here with this. Question number 1. According to the recent survey by BIS, which is Bank for International Settlement, exchange traded derivative market is the largest derivative market we have in the globe. Well, only on IRS, which is majority trading on exchange traded and OTC both, the volume is not less than 1768 trillion if I assume 272 working days. Now the question is that once, I don't know which kind of flow trading the Doshi will sell, but whatever, this would have an implication on the CCP, because in every ETP there is a CCP. It could be SGX, it could be LCH, it could be Euroclear, it could be HKMA Clear, Hong Kong Monetary Authority, HKMA Clear, it could be LCH, it could be anyone actually, to be honest. We don't know. Second important thing which is coming, that if Doshi will quit from the flow trading for a minute, I assume, then every bank is having some interbank limits. I don't know, but Goldman is sitting on a $43 trillion of derivative book, so their interbank limit might be more than 100 trillion or maybe more than that. I don't know. Doshi is also not a small bank. So if Doshi interbank limits, if Doshi will stop flow trading, it would mean that the interbank limits would be free. That's a very tactical question. Once you buying the flow trading of Doshi, example BNP buying the flow trading of the Doshi, is BNP also buying the interbank limits of Doshi? We don't know, because this information interbank will never tell you. Or for a minute, if we assume that BNP buy, is it they buying in pieces? We also don't know. And third and most important question is the investor and the investor faith and the regulatory approval. Well, I would like to have one simple question from the regulators, is that Doshi wanted to sell, I think under whose regulatory compliance, under whose regulatory limits that Doshi is allowed to create capital relief unit, number 1. Under which regulatory compliance Doshi invited bids for the flow trading. Under which regulatory compliance they are now inviting bids for the exotic desk. So does that mean that the banks are free at their own? They can take up now in the good times they can do the flow trading themselves, book the profits in their book and have their share price hefty and then ESOP to their senior management and let them be rich. And in the bad times, because of their interbank cordial relationship, they sell this in the interbank market. We don't know. But one thing we know is that Doshi flow trading is unsolved. That's I'm sure. And I have not seen a single regulator came in the public domain and criticized that. I have not seen a single regulator. But God knows. We need to wait and watch. But there is a hell lot of action happening in the financial market, and that is the reason at 3 a.m. we have this video. Because throughout the day you need to track what's going on. I think 3 to 4 years down the line, a severe consolidation in the banking sector is bound to happen. You agree or disregard, majority of the US big banks have to collapse. because we are running a business model which actually may or might not hold true over a period of the time. With this, we thank you very much. You know our mobile number, which is +91 9899242978. You know our fixed income platform, www.fixedincome.global. Have a great time.